Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Wednesday. Hopefully everybody's having a GGD, a great green day in the market. You know I always wish the best for my viewers and subscribers. I want to apologize. Tuesday I just got lazy, so I didn't put a video out. I do apologize for that. But today we are up about $248. For the week, we are up 460. For the month, we are down 322. The 3-month mark, we're up 2,800. For the year, we're up 6,600, and then all time we are up $9,062.38, up about 34.5% since April 13th of 2018. So as you guys can see, there's been some ups and some downs. We had the pandemic hit in March. That made us drop about 20. Look at the bottom; it's about 2,100. Got us down to $24,000. Then we kind of came back up, got slammed again by oil. Made us go down another about $25,000, down 561. But then now we're reaching all-time highs again, up $35,000. So look at that, up 10K since October of 2020. That's phenomenal. So this is just proof that as long as you stay in the market, it goes up. So especially if you hold quality companies. So right now we have $143 of buying power. That is all of our dividends plus the sale of Procter & Gamble. And we also will be getting paid on Thursday night, so I'll have money transferred by Friday, and I'll be playing with that in the market. I'll be deploying that and buying some Coca-Cola shares. So right now, we're going to jump into the individual holdings, starting with Realty Income. 120 shares, $8,500 of market value. Average cost is right around $65 a share. 24% of the portfolio is in Realty Income, up $80 today, up $766 total, up nearly 10%. And a dividend coming in on the 25th of June. It is a monthly payer. But as you guys can see, we're only paid for 107 shares, not 120. So there's another 23 shares that we are not paid for, which will add another about $3 to the total. So we're actually going to get paid about $28 next month. So that dividend is off, but I like it being incorrect and always being more. So I always try to buy more. So when I get paid more the next time. So Realty Income will be paying us, and that will add to our cash flow. Next, we got Coca-Cola, the stock I plan on buying. We have 25 shares, about $1,400 of market value. $52 is around our average cost. Around 4% of the portfolio is in Coca-Cola. Up 62 cents today, up $93 total, up 7.2% on Coca-Cola. Next, we have Allstate. We have 6 shares, $800 of market value. Average cost is right around $106 a share. 2.27% of the portfolio is in Allstate, down $6.50 today, up $165 total, up 26%, and the dividend coming in of $4.86 for all 6 shares that I own. They did a very big dividend increase this past year. At the beginning of the year, they were paying around, I think it was 40 cents. 41 cents a share. They increased that by about 50% to 81 cents a share. So as long as I keep that even close to that dividend growth up, I'm going to keep adding. But I don't want to add it currently because as you guys can see, I'm up about 30. They're up about $35 from my average cost. So if it gets around, 110, I'd buy it. But this is a little overpriced for me. Then we've got Altria, 152 shares, $7,600 of market value. Average cost is right around $52 a share. Around 22% of the portfolio is in Altria. Today we're up around $40 a share. Total we're down over $300, down 3.9% on Altria. But I will not be buying more. I do realize this is the lowest cost basis for this set of months, and I said that I would be buying Coca-Cola instead because look at that double-digit percentage. I don't want that to be as high as it is. Coca-Cola, by comparison, is only about 4%, so nearly 20% lower than Altria, and I definitely want to boost up Coca-Cola. So I will not be buying Altria. I'm going to repurpose the cash that I'm getting from dividends and the cash that I add, and I'm going to deploy it to Coca-Cola stock this month. Plus, everybody knows me as the Coca-Cola guy, so the fact that it's not a bigger position is kind of insulting. So next is Verizon. We got 2 shares of this telecom, about $115 of market value. Average cost is sitting right around $57 a share. 0.32% of the portfolios in Verizon. very new position, very small position. When I initiate a new stock in the portfolio, I always go for about 2 to 5 shares. That's what I try to do. Sometimes it's one, but I try to do a small amount of shares so I can easily double it, so I can make sure my cost basis goes lower and I can add more shares and double that. So let's say I add 2 shares of Verizon at 57.19. Well, if it goes down to say $57, I can easily replicate that first buy and my average cost gets cut down by that percentage. See what I mean? So I can always add lower, but when I start out, I want to be able to really pile on the share count, so at a lower price and take advantage of it so I don't go up in average cost. So right now I would not be buying um, Verizon. It wouldn't be a huge deal. So actually right now I probably would if it got up too high, like hit $58 instead of 57 in change. I definitely wouldn't be buying it above about $60 a share, but right now I definitely will be buying Verizon. Normally I wouldn't because of course the average cost is higher, but it's not that much higher. So when I only have 2 shares, so like I said, I could double that up easily, and then once it goes below, I could buy something like 10 shares and really cut down that average cost. But to be honest, guys, the average cost for Verizon isn't that big of a deal. This and the next stock, being 3N, are going to try to replicate the money that I lost from AT&T. So it's not necessarily about the average cost for these positions. It's more about getting that dividend income back. So next we have 3N, only 1 share, around $50 of market value. Average cost is $46.37. 0.14% of the portfolios in 3N. That's nothing. This is going to be a very, very big position in the portfolio. 73 cents worth today, up $3.83 total, up 8.26% on national retail properties. Love this company, and I will be pouring money into it when this month comes around. Next, we have AbbVie. 60 shares, $6,800 of market value. Average cost is $72.22. 19.4% of the portfolios in AbbVie. Today we're up 103. Total we're up 2,500, up about 58% on AbbVie. Next, we've got Pfizer to close out the. Next is Aflac, which will close out the portfolio. We have 102 shares, $4,000 of market value. Average cost is right around $39 a share. About 11.5% of the portfolio is in Pfizer. That has gone down because we've been buying other stocks. Up about $90 today. Total up $77, up around 2% on Pfizer. And then we have Aflac to close out the portfolio. 103 shares of this aristocrat, $5,800 of market value. Average cost is right around $49 a share. 16.6% of the portfolio is in Aflac. Today we are down about $60 a share. Total, we are up around $782 a share for the position. I wish it was a share. So we're up $780 total, up about 15.5% on Aflac stock. And then I decided on the last position, being Travelers. I know it's a pretty expensive stock, but I'm not worried about that. Not worried about the price, more worried about the underlying business. And Travelers makes really, they get a lot of premiums, and they do really good on their underwriting insurance. So at $157, as long as it stays below that 52-week high, if I could get it closer to the low, I would. But like I said, when I initiate a position, don't really care about the cost, as long as I can cost down average, which I have plenty of space to cost down average here. So definitely going to be buying Travelers when that month comes around. Thank you guys so much for watching. Remember to hit the subscribe button, and when you do, hit the bell notification. Thank you guys so much for watching. I'll see you tomorrow with another Robinhood portfolio update. Take care, guys.